FirstRand operates as Rand Merchant Bank, First National Bank and West Bank, and today reported its full year results, which were up 32.5% on last year. FirstRand has a market cap of 154 billion rand. Based on today's results, it has a price to earnings ratio of 12 and a dividend yield of 3.7%. Good set of results from the company today.
Yes, and they have been doing well, but I think that the real reason they've rallied so well in the last couple of years is because they have progressively reorganized the group to the extent that FirstRand finally today, stripping out all those other insurance stakes, finally just represents 100% of Rand Merchant Bank, 100% of First National Bank, 100% of West Bank. So that's fantastic. I think the global markets really warmed up to that. The reality then is that it was at a discount back here because people couldn't make head or tail of the group and the cross holdings between it and Rand Merchant Bank holdings and so on and so forth. From here, I think though it gets a bit harder. As you say, 12 PE is a little bit higher than the others. From here, I think it's harder to
keep this momentum going up.
Exactly.
Craig, do you buy at current levels on FirstRand?
No, I think it's run quite a lot, and it's a lot of good news is priced into it. Now, there's two key ratios one looks at the banking. The one is return on assets, and they saw a nice increase in return of assets to 1.73%. But if you compare it to the others, and I'll mention them as we discuss all of them, Standard Bank, I don't think I mentioned, but it was 2.1. So that return on assets figure was a bit higher. And their cost to income ratio, though, is the lowest of the market. So that's another ratio. They're probably the most efficient and leanest because they use technology to a large degree.
What is their cost to income ratio sitting at on FirstRand?
It's about 53%, just 53.4 to be exact.
But can they continue this positive momentum? Craig, can they continue the positive momentum from a share price perspective?
No, absolutely. The company will continue to grow, especially as they expand into Africa. Africa's only about 8 to 9% of the business, and they're talking about India, they're talking about China. They have just announced an acquisition in Ghana as well. So there's a lot of growth that'll come forward. They've got a lot of headway to make in comparison to Standard Bank on the African continent, and with their technology, I think it'll help them grow. But I think a lot of that's priced into the share at the moment.
In terms of FirstRand, just the management team, they're very visible. You've got the likes of Sizwe Ngasana. You've also got the very colourful personality of Michael Jordan. He's very prevalent on Twitter.
Yes.
Market loves him. Journalists love him.
Yeah.
He's got a great profile, and he's done a lot for FNB itself.
Yes, and I think where he's been best is in driving new technology in the bank, because that stuff's not just good because it's sort of fun to talk about. It's good because it reduces the bank's costs, because for every customer that you've got using an iPad app, that's one less schlub that you're going to see coming into the branch.
As Craig points out, that's why their cost to income ratio is around 52.
And also remember, in banking, when it comes to retail, the vast majority of retail customers are not profitable. It's only the sort of top niche that makes sense. So you really want those young, technologically savvy people that are going to be the entrepreneurs of the future. So all of this adds up, all of this stacks up. I think that's great. And I think there's plenty of business to be done in this environment. But understand these are big companies. I think FirstRand's market cap is right up in the 160 billion rand environment. So these are globally held stocks. So the price is going to be determined by investors that are looking at banks in Europe, in the US, in emerging markets and these other kinds of places. FirstRand for me is really a South African play.
And that's the point here.
Africa, outside of South Africa is still relatively small for them.
Do you believe, Craig, you are throwing forward to the Africa story with regard to FirstRand? Do you believe that they're going to be able to play catch up to the likes of a Standard Bank that obviously has first move advantage in many of those territories?
Yeah, so look, they're looking at Ghana, Nigeria, Kenya, and some of the situations there will be joint ventures. But besides the African continent, they're also talking about emerging economies, India, China, where there will also be partnership arrangements. So I think the growth will be steady, but we saw 8 to 9% growth in comparison, and it's very much retail focused. 52% of the local income's retail. That's what they're going to do on the African continent. So I think there is definitely room for growth. There's lots of opportunities in Africa.
Craig, staying with you, hot or not on FirstRand?
I'm going to say not hot, but it's based purely on evaluation. The company's hot, but the share's not.
Hot or not from your side?
I like that framing that Craig has just given you, so I'm going to go with the same view. Like the company, like the people, but not hot at the current level, just below 30 Rand.
And with
share.
that caveat, you protect yourself from a barrage of negativity on Twitter from FirstRand.